Welcome to Martin Lucas Investor Training Course with Sensei Crypto and Sensei's Insights. This course will cover technical analysis so you can become a more informed investor, helping you find all the technical analysis, support lines, trend lines, buy zones, sell zones, so you have an increased chance of winning on the stock market. We hope you enjoy the course. And now, without further ado, I'll hand it over to Sensei.
Hello and welcome to Martin Lucas Investors channel. We are doing the first episode of the first series of the Foundations of Technical Analysis. So without further ado, this is the first episode. So what is technical analysis? If you've ever looked at a price of a chart and you thought, how do people actually read this thing? What does it mean? What's the RSI? What's trend lines? All that sort of stuff. We're gonna cover it today. So what is actually technical analysis? Because a lot of people might not know what technical analysis is, and throughout this whole series we'll dive deeper. But let's start off with the basis of what is technical analysis. So welcome to series 1 of our technical analysis training. Today we're starting with, at the very beginning, what technical analysis actually is and why it's so powerful. So here we go. The art of using historical price data to predict future market moves. So we're looking at focusing on the price action, where you're going to use patterns, levels, indicators, and volume to help us navigate the markets. And the beauty of this is, no matter what you're looking at, stocks, crypto, forex, currencies, the art of technical analysis is going to be there throughout. So a technical analysis versus fundamental analysis. What is the difference? Those are the two main ways of analyzing something. Fundamentals are about the why a company or a coin has value. Technicals are about when to buy, when to sell, how to spot the move before it happens, where are levels that are low risk. So in technical analysis, we're using charts, indicators, patterns, and levels. We're going to try and time market entries. We use historical data to help predict future moves. Fundamental analysis, what Martin does a lot, is looking at news, earnings, the macroeconomics, valuation metrics, long-term value judgment, and future forecasts as an example. So going on to the tools I use when we do technical analysis, the ones on the screen right now are the main ones I use doing technical analysis. So we're going to go through each of them in the series. There might be more. These are the main ones. There's different ways to use them in conjunction, even using them in conjunction with fundamentals as well. So there's a lot to cover, and we want to keep this simple and do it in step by steps. So these are some of the tools I use: support and resistance. That's where the price reacts. Candlestick patterns. That's if you like, the language of price. Trend lines. The direction of the market, the trends, your friend, that's where all of those sayings come from. Fibonacci, so this is retracement zones, where the ones that traders like to use. Indicators such as RSI, MACD, help us with confirmation, help us understand something overbought, oversold, what a buyer is doing, and the volume, so that the power behind the move. So what I'm going to do now is just give you a quick example of all of that by just looking at a simple chart. And we're not going to, hopefully I won't overcomplicate things too much now, because we'll dive deeper in each of these in following episodes. But just as an example of support and resistance. So that's when you have a horizontal line, and it's where previously markets have reacted, whether it was resistance or support, and you can predict that that's an area of support and resistance. For example, here recently in the Bitcoin's move, where Bitcoin hit all-time highs back in March of 2024, that turned into resistance because it didn't manage to breach it, and then we had that long consolidation phase. so when it broke it had a big move to the upside because it broke resistance, and then it came back and changed it into support. So just by looking at a chart like that, you can see multiple trades you could have taken, or just navigating the market and know where we are, but just a horizontal support line. Candlestick patterns as well. You can, like, the next one, which was on the list, you could be looking at a bull flag forming where there's sort of a parallel channel after a move up, as an example. And then what did I say next? Trend line. So what trend? What is the trend at the moment? And you can easily do that as well, depending on what the move is. You connecting the dots theoretically, and saying right now, for example, Bitcoin's an uptrend, but if that trend breaks, maybe the trend has ended and the trend is our friend. So we're going to be looking into when to use these. You could be looking at Fibonacci's as well, taking it from highs to lows to see where the retrace levels could be, and what targets are as well. And then indicators. So you can it can get a bit complicated. You can start looking at RSI, and it's not just as easy as overbought and oversold. You use it to identify structures, bullish divergence. Now down here, you've got the MACD. You start looking at the volume. You can see the volume up here as well on the chart. So don't worry if you don't understand all of this yet. There's more we need to cover, and I want to do it in a step-by-step way. So by the end of it, you can look at a chart exactly how I look at a chart and identify structures, just like me. So that's just a quick sort of understanding of what that is all about that's coming up. So why do I use TA? Think of it as forecasting weather. You can't control the storm, but if you understand the patterns, you can prepare. Looking at the charts gives you a good way of understanding trends, risk to reward, combining it with fundamental analysis, understanding where other people might be buying, where price action is. There's the main reasons. It helps with entries and exits, works on any time frame. So you can be doing it on a 5 minute, you can be doing it on 1 day, you can be doing it on a 3 month, a year basis. Each candle is different. Each time frame you look at, you can identify all these structures, from the minute candlesticks to the yearly candlesticks. And I'll tell you my favorite ways of doing it in upcoming videos, and looking at all those different time frames. It can be used in conjunction with fundamentals, and that's the best way I like to use it. Yes, you can just use it by itself and become a trader, but if you don't want to be a trader but you still want to understand charts, and still apply it to your long-term investing, which might be a better strategy for most, then you can definitely do it in conjunction with each other, and that's the way I do it. It's universal. You can use it in stocks, crypto, forex, anything with a chart, even data that anyone provides to you. You don't have to rely on the news or earnings. You don't have to trade based on momentum. You don't have to be late to the party. The saying is, show me the charts and I'll show you the news, because the charts normally get ready for the news items coming. You don't even need to focus on the news when it comes to trading charts. Let's see. So what's next? In the next episode, we're going to be looking at candlesticks. So different types of candlesticks, different ways of viewing charts, different time frames, what candlesticks mean, the open and the close. So we're going to take it from very basic things to very complicated things, but we're going to do it in a way that we leave no one behind. And even if you might know these things, then it's good to get refreshed and know exactly how you're dealing with charts. So thank you everyone for tuning into the first episode. This is going to be constant updates and constant episodes coming out. So probably the next one's already out. So enjoy the next one, Candles 101. Thank you. I'll pass it back to Martin.
Sensei, thank you very much indeed. I'm sure everybody will enjoy this course. We look forward to the next episode. Until next time, as always, take care of yourselves and each other.